Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's take a look and see what people are sharing. If you want to follow me, it's at Finding_Finance. And if you want to join our community, finding-value.com. I dive deeper into all of these sectors, topics, looking for potential investment opportunities, sharing those potential investment opportunities with everyone in the community during the midweek update and the question and answer sessions. We also cover certain topics. Our last topic that we covered was currencies and how they impact investments. So going into dividend talks, he says most held stocks by hedge funds: Microsoft, Amazon, Alphabet, Apple, Meta, Nvidia. Do you see a theme here? All technology. This is what market tops may look like for technologies when everybody holds it. So that's the most held stocks by hedge funds. We've got XLE, which is the Select Energy Fund. What I've got written here is XLE falling wedge pattern in the short term. It's this big flag pattern that we've got going on, and it's right up against support. It actually looks fantastic. So I know people aren't looking at the energy sector right now. I've been following oil and nat gas, and to be honest, guys, it doesn't look that bad for an entry point. So pretty good spot right here. This is it zoomed out. We're looking at this corner over here. This is the big picture view. We've got the double bottom, so to speak, here of 99 and 2002. 0203 is when it really started to hit. That's when the dollar had dropped. We had that recession in 2001. Big move lower, and then the big move all the way up to 2008 peak. In my opinion, we have gotten all the way up in 2020, 2021, all the way up to that high. And we are consolidating, hitting that high and that resistance. Right now, we're about to break through it. And to me, with this breaking through this trend line here, we broke out, kind of did a little bit of flopping around it, came back up, and now we've got this nice big flag pattern that's ready right on support. So I think we could potentially break higher here in XLE, and not a lot of people are looking at it. Nat gas to coal ratio. And all I do is I look at different types of ratios to see what's cheap, what's expensive. This one doesn't have any sort of clear pattern. Yeah, there's a downtrend maybe down here to 2023 where there's a corner in 2023. But what this is telling me is that natural gas is cheap to coal. And although coal looks very good, natural gas could be a very good investment opportunity based off of its relationship to where coal is. Now in 2020, right back here, natural gas went up, but coal went up more than natural gas and brought us to this really low, cheap state where natural gas is incredibly cheap against coal. Will it stay that way? Will this work its way on up? Difficult to say. But what we can say compared to history is that natural gas is cheap in relationship to coal. Patrick says, expecting 2024 to be the year to remember. Silver is on the cusp of another legendary breakout, gateway to much higher prices. And he's looking at this from a little bit longer term perspective. This is a yearly candlestick chart. So it's the closings of every single year dotted here. So each candlestick is a year candlestick. What you generally see is you get a big move up, and then you get lots of selling pressure, and you can see that the candlesticks got smaller and smaller and smaller, big bullish engulfing in 1993. We had a double bottom in 2001 and 2. That's when the dollar dropped. This is a double bottom here, bottom 1, bottom 2, with a line going across. So that's your double bottom. We broke out of the double bottom, bam, hit our resistance line or created a resistance area, came back down, did another kind of double bottom here, hit the resistance line again, pulled back with just small little candlesticks, and now we've got a big breakout of that downtrend line. What he's saying is it's a 45-year paradigm shift breakout line. We've got a long way to go, rocket ship to the upside. We could even go all the way up to the rocket ship move of this measured move up to 0.367. So this is I said silver. It's silver versus inflation. It's silver in relationship to the consumer price index, and we're breaking that where silver is going to outperform. So what that means is that we could see a vast outperformance of silver companies. This is really the margins of the silver companies, and this is where we could really get a big move, and hopefully that move leaks into the miners, and the mining companies go ballistic. At least that's what I'm hoping for. And we could see a big outperformance of silver versus the inflation numbers going all the way up here, which is a 3.5, 4 times move. Bullish trend, Javier turned full bear after OPEC media in a meeting. So Martin says, not unexpected, Javier Blas loads up on yet another well-timed article, a Biden administration position, and be done with it. And that's oil's war premium will fade after Israel's Iran strike. The first tentative conclusions from the bombing are bearish, in his opinion. I disagree. Why do I disagree? Because I can go to the market and say, well, what does XLE look like? XLE is on top of a wedge ready to break out. Now, if we break to the upside, that article is null and void. Like it doesn't matter. People are positioning in this, and the news that you guys are listening to doesn't matter. All that matters is how people are positioning in the market and their viewpoints in aggregate about the sectors in the market. All of these individual articles are a representation. They think it's a representation of the media of what the market thinks. But if they can't read technical analysis, it's a moot point. Doesn't matter. Does not matter. All that matters is how are people voting with their dollars, not what they're flapping with their lips. The lip flap doesn't matter. It's how they're putting their money to work in the market. That's all that bottom line matters. Okay, coming down, squeaky mouse. Too many things are in position for silver not to explode. What do we have here? This is a move on up and then a flag pattern that looks ready to break to the upside. Nice big buying pressure, small selling pressure. It looks good to go. Looks good to go. Here's another one, crude oil versus M2 money supply, because why not? We've got a big falling wedge pattern in 2020 where we came to the tip, 1, 2, 3 hump consolidation all the way down. We broke out of that consolidation to the upside, and we've been consolidating sideways here again. That consolidation, if you take it from where we are today and go all the way back up to the high of 2008 and do the same move as 2008, that means that oil could go up about 5.6 times from where we are today. And that would equal the same crude oil to M2 money relationship. So if we're at we're at $72 times 5.6 times, puts you at a $403 per barrel price range. And that would be the same inflation adjusted price, or M2 adjusted price, I should say. It's really inflation adjusted. So $403 is equivalent to $140 back then. We have printed that much money in the system, and it's floating around somewhere in the system already. And that hasn't been accounted for. And we're printing more money as we go on, so that number is probably a low number as M2 money supply continues to expand and increase. Long-term home builder, Lennar Corp. You can see a couple of things here. We had a nice big consolidation. It went from 1981 all the way to the early 90s. This was a rollover in 1991, 92, 91. It bottomed, broke out of that pattern, and then ran all the way up here. We did a shoulder, head, shoulder peaking top. That's 2005, 2006 is where the peak is at. We went all the way down, had a big sell-off in 2008 and 9. We bottomed in an inverse shoulder, head, shoulder. We broke the neckline of that and ran all the way up to the peak here, this resistance line. Had 2020 COVID crash, broke out above it, did a retest, and now we are working our way on up. So we are still moving higher in this home builder Lennar code. And I'm using Lennar as an example for being in an uptrend and the history behind it. It goes all the way back to the 1970s back here. So this looks bullish to me. It does not look bearish. Scrolling down, we've got ADM, back out retest. Is something bigger coming? And this is just Archer Daniel Mills. I'm just using this as an example in the agricultural sector. Now, someone asked on the website, am I buying ADM? I'm not buying ADM. I'm just using it as an example. We've got a consolidation here. The consolidation was from 2006, the peak of 2008, and this was all one big consolidation. We break out of the consolidation, and then you do a retest, and we could retest here for a little bit, and then we will run to the upside. ADM is an agricultural company. They grow and harvest stuff out of the ground, whatever that stuff is, soybeans, corn, whatever. So it looks really good. And we're right at what would be considered a back test or retest of the breakout. Just wanted to let you guys know that. Coal prices are looking solid. This is priced in the United States dollars, and this is global coal, Newcastle coal futures on a big long-term perspective. Your basing patterns here, you break out, you do a retest. And we just did the retest in 2024 early. Now we're starting to come back up. We're going to break this downtrend line and probably get moving at some point. So coal looks really good. Now, I just showed all the way up top nat gas, and we'll show some natural gas charts too. So coal's looking. Here's natural gas. TTF nat gas looks great to go higher. American natural gas is basing out. So there's your base for TTF. We break out of it. Base, and look at that big topping candlestick. These are almost always a top when you get these huge, gigantic wicks at the top. There's another couple of wicks up here. So you're coming on up. We got to levels that were pretty high, and it started wicking out at the top here. So you know you're getting close to a potential top. This is your wave 4. This is your wave 5. Wave 4 goes sideways for a while, and then wave 5 is a blow-off top, and then a selling pressure move lower. We've retested the top here. We've based out. We're doing a double bottom, bottom 1, bottom 2, and then a line going across. And then we're most likely going to break out of this double bottom and start moving on up. So I think that we've got probably a great move ahead of us for TTF gas. That's also being confirmed with Newcastle coal that's above us that we just looked at. Now here's gas in America. Another double bottom pattern. You can draw a line through here, right at the top through all this. And I think this is a double bottom just like TTF gas. And then we'll break to the upside. There are estimates on natural gas for America that are calling for $15 MMBTU 1 year from now. There's some estimates out there. Now, is it going to hit it? I don't know. But we'll find out. It's real low right now. Gold to nat gas ratio looks favorable for natural gas, in my opinion. So what you can see from about 2005, we've been going back and forth, up, down, up, down, up, down, almost like this. You know what this almost looks like? It almost looks like a Livermore accumulation cylinder to some extent, going back all the way to 2005-06. So think of this as like 1, 2, 3, 4, 5, 6, 7, and here we are coming on up. Now, is this going to break all the way upwards, or is this going to stay within the pattern and come all the way back down? That's the question. If it comes all the way back down, natural gas is going to outperform gold. If it doesn't, then gold is in this big, gigantic move if we break out of this megaphone pattern where we go to ungodly levels, where gold outperforms everything. That could very well be a potential case. Coal versus gold, what do you think? And what I see here is a rising wedge, where maybe rising wedges generally break downward, but could this break to the upside? I don't know. That's what I'm watching. I just see a squeeze here going on. If we break lower, coal's going, and the energy sector I think is ripping. If we break on up, maybe we get a big, huge blow off top, where you squeeze like this, and then you blow off to the top here, and then reverse. Very well could be the case too, where we get a blow off top in gold. Evan posts, more people have lost money waiting for corrections than in the actual corrections, says Peter Lynch. People have heard that quote before. The cost of timing the market. So timing the market, value of $10,000 invested in the S&P 500. from January 2003 to December 2022. Invested in all days, your return of 10 grand would be 65,000 bucks. Pretty good. If you miss the 10 best days, your return is only 29,708. Now, if you're missing the 60 best days, you're starting to lose a lot of money. 4,205. You're missing the 40 best days, you're down to $8,000 from 10. So if you try timing the market, you can, and you miss some of those best days, you actually get pretty crappy returns depending on how many of those days you miss. If you miss the 30 best days in the market, your 10 grand is only $11,701. Basically, if you're trying to time the market, you miss some of those really good days, your returns are not very good. Not very good at all. Even if you miss the 20 best days, it's not that great. Dow Gold equals 1. So platinum is knocking at the door. This time, it might just kick the door in. We're right up against that resistance line again, and we're trying to break out for platinum. It's got that lead-in pattern where it comes down and then comes up. This looks good to break. To me, it looks good. Gold has a slingshot parabolic base in the making, a 4-year pattern that is still stair-stepping higher. Nice big move there, and we are just ripping in gold. Ripping in gold. And then the last one here, we've got if silver is an 11x from here at least, which he thinks that's the possible case. Imagine where platinum would be if this ratio goes back to all-time highs, which I think it will. And that means that if silver is an 11x from where we are today, in his opinion, that we would see a 543% increase of platinum against that 11x. So think of it as a 6.5 times. So platinum would be like a 66x from where we are today. 66. If silver's an 11, platinum would be a 66 if we reach that high again. Absolutely incredible. And that's what I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. Mayday coupon code is still active if you're interested in signing up. And that's all I've got for today. So we'll catch you next time. This is Finding Value.